Hello, everybody. Thank you for joining us today. We'll give everyone about a minute here just to get settled before we get started. All right. Hello and welcome, agents. Today, we are excited to have Robert Richert. Robert is the Vice President of Life Advanced Markets for Allianz Life with over 30 years of financial services experiences and a wealth of expertise. Robert will guide you through key strategies and insights to enhance your practice and better serve your clients. Today, Robert will cover an introduction to the Allianz Life Advanced Markets team, the available Life Advanced Marketing resources, exciting initiative plans for 24-25, and actionable strategies to leverage Life Advanced Markets to maximize your business potential. Additionally, Robert will share valuable insights into buy-sell planning following the Connolly decision, helping you navigate changes and opportunities in business planning. With Robert's unique combination of an economics degree, a Juris Doctorate, and industry licenses, you'll leave today equipped with actionable strategies to help your clients meet their long-term financial goals. Now, with that being said, take it away, Robert.
Great. Well, thanks for the introduction, and good morning, everyone. Thank you for taking time out of your day to join this. I think this will be a helpful presentation and introduce you to some of the resources we have here at Allianz Life Insurance. So with that, our agenda today is really going to consist of 5 items, and those are basically just going through our some of the things that we're going to be working on for the coming year, introducing to our team, a little bit of a discussion on available advanced market resources and how to leverage those resources, and then lastly, just a quick overview on an important change to the law. If you work in the business life insurance space, particularly in business succession and exit transition planning, a decision that came out in the middle of this year, you're going to want to be familiar with that because it really does fundamentally change the landscape on a couple of items related to that. So that said, let's get into a quick introduction of our Life Advanced Markets team. And the first thing I would mention is I am very intentionally referring to this as the Life Advanced Markets team. Those of you who are familiar with Allianz know we have a lot of products in the annuity space, both fixed and variable annuities, RILAs, and that's an entirely different advanced market team that handles those questions and those types of products. So my colleagues that are shown on the screen here, we are strictly committed to helping you with Allianz Life Insurance, Indexed Universal Life. So I'll start with Corey Luke. He heads up our team. Corey's been in the industry a long time. Came from the actuarial side. We were thrilled to get him over into distribution. He is really responsible for a lot of the product innovation, the business development, and then heads up our Life Advanced Markets team. To the right of that page is my colleague Jordan Skog, who offices in Iowa, is a native of Iowa, and has also been in the industry. He came from Farm Bureau back in the day. He's been here about 4 years. Very capable, as you can see from his industry designations. And then lastly, me, I'm the most recent add to the team. I came here in June of this year from Northwestern Mutual Advanced Marketing, where I worked in the BOLI-COLI space. Prior to that, I worked for a large national bank as a wealth strategist. I worked at Securian for about eight to 9 years, and then spent the first half of my professional career, roughly 16 years, in private law practice. Native here of Minnesota, live in North Oaks, if you know where that is. So my wife and I are Thrilled to be here, even though today I've got to question my judgment when I'm looking at the temperatures. But anyway, so what are we kind of working on for advanced concepts? So this kind of lays out, I think, the three categories that we talk about when we look at advanced marketing concepts in the life insurance space. First, obviously, the personal use of life insurance, basic protection for families. Life insurance, used in qualified plans, LIRP, that would be life insurance and retirement plans. Obviously, all manner of estate tax planning, including credit shelter, the old bypass trusts, as we called them, disclaimer trust, Q-tip trusts, slats. Um, Estate planners love their acronyms, so I've listed out as many as I think apply in that personal space. But it's also things like estate equalization for business owners. It's what are the fundamentals of how life insurance is taxed? If you want to be really good and technically proficient in this space, there's just certain tax concepts you need to be familiar with. Um, and then lastly, intergenerational planning, which is one of those things we're seeing more and more of, where families are starting to really plan 2, 3, and 4 generations and really come up with a family philosophy around wealth. So we're seeing a lot of development in that space. Next would be the charitable planning. With changes, starting with the Trump era tax cuts in 2017, we saw a lot of movement in that space around people who had been Schedule A filers who now need to think carefully about when to make charitable deductions so that they can leverage the deductibility of those deductions in a tax year if they're not already a Schedule A filer. So a lot of strategic planning around the timing and amount of gifts. And then how to do that gifting. Do you just do it as an outright gift? Certainly that's the simplest. Can you leverage life insurance? Maybe through a combination of CRT for a low basis asset, coupled together with owning some life insurance in an island, for example. And then lastly, the business use of life insurance. That's something that we're seeing more and more of. If you're not already involved in that space and you have clients who are closely held business owners, that's a space you're going to want to be familiar with, and we can help you there. It's everything from Section 162 bonus arrangements, restricted, unrestricted, endorsement split dollar, loan regime split dollar, non-qualified deferred comp, supplemental retirement plans, rabbi trusts as an alternative to basically form of non-qualified deferred comp arrangements. And then lastly, just the old staples of business succession, exit, and transition planning. And I would even lump in there key person insurance for key employees of that business. So these are the areas, kind of, if you think about it, that we focus on when we develop advanced marketing materials and presentations. So a little bit about what we're working on coming up. I started this list and I had prepared this presentation last summer. And at that time, of course, we didn't know what the outcome of the election was going to be. And so front and center on this list was estate planning strategies for 2025 and beyond. And that obviously focused on the changes that were going to take effect at the end of 2025 related to the federal estate tax and that significant ratcheting down of the unified credit amount. I think it's an open question as to probably not whether there'll be changes, but what changes and how quickly those occur. I know I've heard some commentary out of people involved with the new administration that this will be a high priority to extend a lot of those, what I would term Trump era Tax Cuts and Jobs Act provisions, not only in the personal and corporate income tax space, but also in the transfer tax, federal estate gift and generation skipping tax space. So I think a lot of what we were planning for is probably in a wait and see mode right now to see how quickly and to what extent those things change. But don't forget, we've also got, still roughly 17 states that have a state version of estate tax. So even though the federal might not be changing as much as we thought, we still have lots to do. And in fact, in Minnesota here, those of you who practice here know that we are one of those states that has a Minnesota state estate tax. Key employee compensation strategies, we're seeing more and more interest in those. I think that indexed universal life is a great fit in the business arena because of its flexibility in premium payments for a business that may be struggling with a cash flow issue, that rigidity of needing to make a payment that you have, for instance, in other forms of permanent insurance, such as whole life. It can be rather rigid for a business with variable cash flows. So definitely, if you're working in that space, give IUL a look and see how it compares. And I would also say that business owners are used to taking a little more risk. The expense of the guarantees that are offered in whole life can sometimes be something that a business owner would rather maybe have a lower expense insurance policy and be willing to take some market risk. There again, just making IUL a really good fit. Business succession planning materials we're working on, advanced planning, illustration capabilities. For those of you who have used our illustration software, and if you haven't, you really should run a case. We do have 3 different components in there. We have a bonus illustration feature, we have a split dollar feature, and then also a non-qualified deferred comp feature where you can actually tailor illustrations to fit those planning scenarios. So if you have questions about that, you can have one of our internal wholesalers walk you through how to use those. They're very easy. I just did some training on that with a group yesterday. Very easy to use and very powerful, I think, tool to use with your customers. One of the things we're going to be rolling out next year is advisor study groups. I haven't decided on the makeup of those groups, but those are really going to be learning from colleagues. And probably colleagues that don't compete directly in your market. So some of you may be invited to join those groups. Target marketing by industry. We have some of that now, if you're familiar with our advanced planning library, where we target a specific industry and what are the trends and what are the planning trends that are occurring in those industries. When I worked for the bank I worked for was an ag and commercial bank primarily. With retail locations, but the focus really was a lot of agricultural. And the planning is very different for farmers and ranchers. So, take a look at the target market by industry work that we've done. You'll see more activity in our social media space, both for Jordan and I particularly. So we'd invite you to become LinkedIn with us on LinkedIn. Spotlight series is beginning in January. That's going to be a periodic spotlight on a particular topic. I think the first one is on business succession planning, and really we'll position how you use our product in those spaces. If you're interested in being added to the list, the invitation list for that, just simply contact me by email and I'll get you added to the list. Life Advanced Marketing Insights. Those are something that I started this year. The Connolly decision is a great example. These are meant to be things that are really ad hoc and designed to bring advisors up to speed on recent developments in regulatory matters, legal matters, tax matters, things that change that you really need to be aware of and not be ambushed or mousetrapped by a client who knows more than you might on a particular change. And then lastly, our advanced markets library, which I'll show you here in our next slides. So, one second. Okay, so this will give you kind of a, this will give you kind of a snapshot of our Life Advanced Marketing library. And you can see here, these are just some screenshots of what you might see. And these are all print-on-demand forms. They consist of kits. And you want to be careful. Some are designed only for professional advisor use. They're really meant to be instructional or informational to your practice. Others, as you see, are consumer approved. Seeking a tax efficient portfolio is one of the consumer approved pieces that you can print and use at a client meeting. So the way you get to these is through our Allianz Life a site that's a secured site, so you'll need some login credentials, which we can get to you. But these are really under the topic of sales tools, advanced marketing materials. And then we do have a site that is more public facing where you don't necessarily need login credentials. And I'll show you that here next. Okay, so we call this our Life Advanced microsite. And the best way to get here is to just copy down that link you see there, www.allianzlife.com/life sales tools. The landing page is what you see on the left-hand side of the screen here with that kind of red bar in the middle. And you'll see across the top, denoted by the orange circle, you'll see a number of drop-downs that you can go into, sales resources. The one you're going to want to go into is advanced markets. And you will see groupings of materials similar to the group of topics I showed you earlier. We kind of have these grouped together, and thumbnails of what you'll see in there appear on the left-hand side of this slide. Anything from charitable remainder trust to flexible estate planning strategies. We have a really good one in there that's kind of a tabular approach, comparing and contrasting different types of executive comp plans, who owns it, how it's taxed, why you would want to use, endorsement split dollar over collateral assignment split dollar, pros and cons, things of that nature. So if you haven't been to this Life Micro site, I'd encourage you to visit that. Again, you don't need any login credentials. If you go directly to this site that's shown here, it'll take you right into that landing page. One thing I would note is you see there a tab called Foreign Nationals. That is a program that we are probably going to be bringing to an end. That was a program where we would offer life insurance to people who were actually had citizenship of a foreign country within certain parameters. That it really wasn't used that heavily. It's going away. You'll also notice there a topic of premium finance. That's something, if you have any familiarity with Allianz, something we've been heavily involved in over the years. And in fact, I have a colleague who's dedicated completely to that premium finance space. His name is Jeremy Conover. So if you have questions in that space, we can be a great resource for you as well. And then the other thing that I think really sets us apart from other advanced marketing departments that you might deal with is we subscribe to a service that gives us access to roughly 140 of the most frequently used documents in connection with life insurance and planning. And this is grouped to individualized planning, charitable planning, estate planning, business planning. And I'll give you just an example. If you were going to deal with split dollar, for example, and you were dealing with loan regime split dollar, you would obviously need the split dollar agreement, but you're also going to need a corporate resolution where the company or the employer adopts that agreement. You're going to need some sort of a loan agreement or a promissory note. All of those forms are included in this library that we subscribe to. We pay handsomely for this. So, it's available for you. The way you would access this is to contact your internal life wholesaler on our sales desk, or you can contact me directly and just say, I'm looking for, a standard ILIT. I'm looking for a basic buy-sell agreement or a CRT. And I would say, as an attorney, I would say these documents aren't meant to be robust. They are meant to be a starting point, a template, which a lawyer is probably going to want to expand on in their drafting. But I think where they really become useful is you're dealing with a customer who's in maybe a more rural area where the attorney isn't dealing with charitable remainder trusts every single day and just needs a starting point to get familiar with what kinds of things are essential to be in a document of that type. So don't overlook that resource. It's become very, very popular. I use it almost daily to reference things. So if you're interested in seeing more of that, again, reach out to me and we can even spend some time doing a screen share and I can show you what's available in there. Okay. What we're working on in 24, the remainder, roughly 2 weeks, 3 weeks yet, and then into 2025, we've got some exciting things coming up, and we're getting ready for whatever tax changes occur. At the time this presentation was created, it was obviously an anticipated sunset of the federal estate tax as we know it today, and a substantial decrease in the unified credit. That's going to change. We just don't know exactly how yet. So we're closely monitoring that as we go into 2025. And whatever tax changes in addition to that may be coming as a result of the new administration. Integrating our newest product, Allianz Life Accumulator, that's our indexed universal life product, into some of the more popular financial planning software programs such as Money Guide Pro and eMoney and the like, figuring out ways that we can show easy illustrations or incorporate our illustrations into those programs. We wouldn't use the program, obviously, to do the illustration, but we do a really effective job of this on our annuity side. So we're trying to emulate that on our life insurance side. So look for more on that as we go through the next year. Doing a lot of external presentations. Both Jordan and I love to present. So if you have groups that you think it could be beneficial or just for your own office or whatever, talk to Luke Hagan if you're here locally or your wholesaler, and we can start getting that organized. Study groups, look for those. The spotlight webinars, get on the mailing list if you're not already. We're also looking to do some turnkey implementation kits. So for example, if you're working in the business space, what do I need to share with a client to kind of be turnkey on a business succession plan? Everything from, what type of entity choice is the best? How do I do the business exit succession transition planning, template documents, resolutions, some idea of tax savings, contrasting different products, really just everything you would need to become an expert with your client in those spaces. And then just bringing more Life Advanced Markets sales modules to our life illustration system. So I mentioned the 3 we have. We're likely to expand that as we go into the coming year as well. And probably you'll see changes to our illustration system. I can't say more about that right now, but I would anticipate some probably functionality changes to that as well. Okay, so that's a basic introduction to our advanced marketing team and our resources. How do you best work with us? I would say that it's important to understand what Jordan and I do and kind of what we don't do. So Jordan and I don't spend a lot of time on illustrations or running interference on underwriting questions or in-force administration questions. Certainly we can be an escalation point for those. If you're having difficulties and you've got an in-force policy that you're just, tearing your hair out and don't seem to be getting to the right resources, why, by all means, I want you to reach out and we will see if we can get you the help. But that's not what we are best at, what we do day to day. What we do day to day is really work on the more complex things that are time consuming. We help educate. I like to sometimes say we're professional explainers. Mainly for you. You're our client. And by extension, our sales teams. What we don't like to do is necessarily get on the line with an end consumer. I think there's often a danger that our role is misperceived, that we're there to give legal or tax advice, which obviously we're not. We're both licensed attorneys, but we're not here to render individualized estate planning advice or tax advice to the consumer. So I don't at all hesitate on getting on the phone, on a conference call with the consumer's other advisors, for example, their tax preparer, their accountant, their other insurance people, or bankers, attorneys. We frequently do that. I don't think there's a week goes by where I don't talk to a consumer's attorney about a plan or some way to overcome an issue. So that we can do all day long, but we try to stay clear of the end consumer discussions. Um, we're available if you want to just have a discussion on when does premium financing work. I haven't used it before. Help me identify situations I may be overlooking where that could be a real benefit. I've heard of the split dollar thing. What is that all about? I want to learn more about that. That's what we're here for. So that you don't, we want to be an effective resource to educate you on all things advanced markets, all of those topics that I mentioned earlier. Or just basically, how do I find something? I need a piece to explain to my client some concept. Do you have something? We can point you in the right direction, template documents. So there's quite a bit we can do for you. Best way to get us is reaching out. You can reach out directly to us. You can reach out to your internal on our life side, and they can get you to us. I office right here in our main office in Golden Valley. I'm in every week, so very, very accessible to you. All right. So hopefully that gives you a nice overview and you have a better understanding how we can help. I want to pivot now to talking about this decision that came out this summer called the Connolly decision. Hopefully this is not the first time you've heard that name. But this is an interesting case. I'm not going to spend a ton of time on this. I want to basically familiarize you with what this case was about. And if you're working in this buy-sell space, this is definitely something you're going to want to become more familiar with. So basic facts. What was Connolly all about? Well, Michael and Thomas Connolly were the sole shareholders of a company called Crown Sea Supply. It was located in St. Louis, a small building supply business. Think about, wholesale supply companies supplied millwork, doors, windows, that kind of thing to contractors. They had, and basically, so Michael and Thomas were the sole shareholders, okay? And to their credit, they had done a hybrid buy-sell. And for those of you who don't know, the name hybrid is just a combination of a wait, it's basically a wait and see. So you might buy each other's shares, that'd be a cross purchase, or if shareholders elect not to do that, then the business has a requirement to buy those shares and do a stock redemption. So we call that, we'll wait and see what elections we want to make at the time the event occurs. So that's a hybrid buy-sell. They had an outside appraiser was supposed to be used to establish the redemption price if a shareholder died. The corporation had $3.5 million of life insurance on each brother. And that's a little bit strange because they didn't have equal ownership in the company. One brother owned roughly 77%, the other 22%. Michael, the owner of the majority shares, dies in 2013. Now think about that. We're 2024. We just got a final decision. His death occurred, back in 2013. So this decision has been percolating through the federal court system for quite some time. There was no appraisal done of the stock. The family simply agreed that $3 million would be the agreed upon redemption price for the company to buy the stock of that deceased shareholder. And then they reported that value on that deceased shareholder's federal estate tax return. Well, as is often the case, the IRS audited that estate tax return, asserting a value not of $3 million, but of $5.3 million, which, by the way, included the $3.5 million of life insurance. And that fact is pivotal to this entire case. And it's what precipitated the litigation. So Michael's estate was determined to have owed another almost, $900,000 in federal estate tax. Well, not surprisingly, they did pay the tax to avoid future penalties, but then sued for a refund. And that's really how this case got started. So that's the background. And the big questions here were whether the life insurance proceeds that are included in the value of a deceased shareholder's shares, when the corporation has to use those proceeds to purchase the shares, should those be included in the valuation of the shares? And up till now, the answer to that has pretty much been no, based on an earlier federal case from out in California called the Blount decision. And so the concept was they were basically treated as an offset. If you had life insurance that was going to be used to fulfill a company obligation to purchase a deceased shareholder's shares, well, that was not included in the valuation of the company. It was earmarked for the purchase of those shares, not part of the purchase. The court answered that. The Supreme Court answered yes, that corporate-owned life insurance cannot be offset by a redemption agreement. It has to be included in the valuation of the shares. And that's why the IRS came up with such a difference in valuation. So the key takeaways from this decision are this is going to impact corporations, okay? It might, by extension, also affect LLCs and other types of entities. But this case, in its strict terms, was about a corporate entity ownership. So it'll impact both C&S corporations who have redemption agreements, so only redemption agreements, where the company has an obligation to buy back the stock of the deceased shareholders, and where they must use life insurance to fund that redemption. Not all buy-sell agreements, obviously, are funded by life insurance. If, for example, the shareholders aren't insurable, you have to use other means, a promissory note, installment sale, whatever it may be. So these are key facts in that bullet point 1. If you've got those situations, this is a case that will apply. And the case really does provide a long overdue resolution of what had developed as a split in federal courts, split authority or split opinion. So this really resolves that. And, a lot of commentators are still debating whether the Supreme Court got this one right. But the thing I go back to is this was not a close decision. I mean, I think it's a lot easier to argue that the court erred when you've got a 5-4 U.S. Supreme Court decision. This was a unanimous decision. And if you think about the division on our court, in terms of left-leaning, right-leaning judges and those who may be, hostile toward business or not, or whatever, right? It was sort of stark that this was a unanimous Supreme Court decision and that the taxpayer didn't win at any level. The taxpayer lost at the federal district court, he lost at the federal court of appeals level, and again at the Supreme Court level. So again, this is going to be the law of the land. I don't think this is going to be challenged. I don't think you're going to see a legislative workaround to this. Again, not a close call. The other thing that I think this decision highlights is that just because a taxpayer comes up with a valuation method, or business owners come up with a valuation method in their buy-sell, it's not going to bind the IRS, especially for federal estate tax valuation. The IRS will determine its own valuation. Now, there are certain valuation methods I think that the court is going to be much more, or the IRS rather, is going to be a lot more deferential toward. And that's a discussion for another day. If you meet certain requirements, I think you have a lot better chance. But I don't think you can ever provide a company with the full comfort that just because they've agreed this is a reasonable valuation method, it will be the one adopted by the IRS. This is, for everything that this case isn't, and for all the angst that it provides, it also provides a lot of opportunity, right? It provides a opportunity for us as advisors and professionals working with businesses to say, we need to pull out your buy-sell and take a look. And often in doing this, you find additional opportunities for insurance. Normally, when I look at a buy-sell and I sit down with a business owner, back when I was in private practice or working at the bank, I would ask the business owner, I would read the agreement ahead of the meeting, and I would say, tell me what you think your buy-sell does. How does it operate? And they would tell me. And I would say, well, it's sort of, right? This is what the buy-sell actually does. It's actually a cross-purchase. Or you're underfunded in terms of the life insurance you need on each shareholder. That was often the case. So I think this provides a real opportunity to have clients pull out their buy-sell, look and see, has their insurance, has their insurance kept up with the increase in valuation of the business? Or has the business, increased in value exponentially, and the insurance amounts are the same as they were 10 years ago. These can be nice opportunities for additional sales. And if you need help reviewing that buy sell, that's another thing that Jordan and I can serve as a resource to help you with. Corporations are simply going to need to purchase additional life insurance to fund some of these stock redemptions, and probably take a look at their personal estate planning as well to make sure that they've done the proper planning, particularly where you have a taxable estate. And then lastly, and I'm not going to get into a great deal of discussion about this, but just keep in mind that the increase in the business value for estate tax purposes may mean a capital loss for income tax. So that is something you're going to want to focus on, because it may be that the capital loss offsets some of that increase in the estate tax burden. And that's a discussion for another presentation, but that opportunity may exist, so don't overlook it. So that's kind of the time I wanted to spend on that, and I'm having struggle with my slide here. So lingering questions, if there are lingering questions, I think it's in these areas. Had the parties abided by the agreement's terms, would the IRS have used that valuation to essentially freeze the business value for estate tax purposes? I think that's a lingering question. The court didn't really resolve that question. Can a redemption agreement be fixed by using a cross purchase? Well, it's interesting. The court actually specifically noted that. And they said, the clients had some other alternatives here. They could have simply used a cross purchase agreement, and they wouldn't have had this issue. And this case wouldn't be before us. Obviously, cross purchase agreements can have a number of shortfalls, particularly where you have more than, let's say, 3 owners to the business. You're going to need a lot of insurance policies, right? And then if you have age disparities between the members of that business, young to old, well, how excited are you going to be as a young person who's relatively cheap to insure, and you've got to purchase a policy on an older shareholder at considerable expense? Maybe they're rated. The inequities with a cross purchase tend to be a lot greater than with redemption agreements. And so they're not all that popular, but yes, a cross-purchase agreement would have avoided the result here. I would say cross-purchase isn't that popular a method to use in a buy-sell. Should parties now use a special purpose insurance LLC? That's probably the number one workaround that's being proposed by commentators after this decision. But I do think that the IRS is going to renew its scrutiny of those LLCs, particularly to say, look, if the only purpose for this LLC is to own insurance, it's probably not a legitimate arrangement. It has to have another legitimate business purpose. So again, discussion, we could go into much more detail on that, but these are just some things to be aware of if you're working in this space. So that's as much as I think we need to cover today on the Connolly decision. If you have questions about that, I'm happy to talk about it. There's been a lot written. There's continues to be things written. I've also written a detailed, about a 4-page white paper on this case. If you want that, please reach out to me and I'll be sure to get it to you. So that concludes my comments for today. We have, I think, a few minutes for questions.
Yes, definitely. That was some great information, Robert. Folks, if you guys have any questions, now is a good time to send them in. Starting off with Robert, what trends are you seeing in advanced markets right now?
Yeah, that's a great question. And I would identify a couple. First of all, up till early November, we were seeing a lot of interest in the use of grantor trusts and slats and all types of trusts used typically for taxable estates. That's cooled a little bit now, where I think people are kind of in a wait and see mode. But definitely, and I think the other thing that fed into that was the Build Back Better Act and its threat to take away most of those arrangements. If you recall, almost every type of grantor trust and ILET and so forth, if it hadn't been formed and funded, was basically going to be unavailable. So I think that really made people sit up and take note, get in to see their estate planning attorneys while they had the time to plan. So definitely that's what I'm seeing there. We're also, we've seen some cooling in the premium finance area as rates have climbed, obviously. I think depending on what rates do, we could see a resurgence of interest in premium financing. So those are a few trends I'm seeing. I do see a growth continuing in IUL, Indexed Universal Life, simply because of its flexibility and the fact that guarantees and other types of more traditional cash value life insurance have become comparably expensive. So those are a couple of things I would mention.
Yeah, that's very insightful. What types of clients typically benefit most from advanced market strategies, would you say?
I would say anyone who's got something a little out of the ordinary. I think that the business owner, is a prime candidate for, the advisor helping the business owner customer. If you're not calling on advanced markets, it means you've been in this business probably for 30, 40 years and you've seen everything. But if you're newer in the business, I just think advanced marketing can be such a help to you, almost an extension of your ability to give advice to that client. So I would say anything that adds a layer of complexity or is a little bit off the beaten path, anything that's, life insurance for other than, you know, personal family protection.
Definitely. And then, kind of going off of that, what advice would you give to advisors that are just entering the advanced market space?
Another great question. So I would I would say learn from everyone you can there, and don't there's no dumb question. You may feel embarrassed asking a question, but really become a student of the industry. That's the best advice I can give you. And, there's it's an exciting time if you're new in the insurance business because there are just so many resources. I mean, you can go out and watch podcasts, you can watch YouTube videos on insurance, and you can just learn so much in our information age now. It wasn't like that when I got out of law school. I mean, I was learning from career agents who've been in the business. So be a student of the industry is the best advice I can give.
Yeah, I would say that's some great advice. Thank you so much, Robert, for sharing these valuable insights today. We really appreciate your time and expertise. And thank you to everyone who tuned in. Partnering with NFI and Allianz Life can bring your clients even closer to their financial goals. So if you're not already contracted with Allianz, reach out to NFI because we're here to help you get appointed quickly. And if you have any questions or need support, call us at 952-887-1239. We are here to help you every step of the way. Take care and have a great rest of your day, everyone. Thank you.
Thank you.